Well, Sri Lanka's finance ministry says it has defaulted on $51 billion worth of external debt, calling this the last resort. The South Asian nation is currently awaiting a bailout from the International Monetary Fund. Its central bank is temporarily suspending foreign debt payments to avoid a hard default. Well, for more on Sri Lanka's debt crisis, we are joined by Murtaza Jafferjee. He is chairman at Advocata Institute. Well, Mr. Murtaza, whether it's Sri Lanka defaulting on its external debt or, the central bank saying it will suspend debt repayments, what is the difference and what does it mean for creditors?
So it's about semantics. The problem was that Sri Lanka's reserves were virtually zero, and we did not have the capacity to continue to service our debt. There were some coupon payments coming next week and perhaps some other debt payments this week. So the central bank was left with no option than to temporarily suspend payment until it can negotiate with its creditors.
Well, Sri Lanka's finance ministry says creditors, including foreign governments, were free to capitalize any interest payments due to them. So what does this mean, seeing that Sri Lanka's creditors include China, Japan, as well as India?
So the capitalization of interest and principal payments was until that we could negotiate, because we ran out of time. Normally, there's a consent solicitation process that should happen. But since our reserves were virtually zero, they had to issue a notice saying that we are going to honor up to the point that we are going to negotiate with you.
Well, Mr. Murtaza, as Sri Lanka moves closer to an IMF bailout, what do you think will be the political and economic consequences for the country? And do you think this bailout would finally spell some relief for its people?
Yes, in the sense that the IMF will be a structural adjustment program, and where the immediate, as you know, leading up to this crisis for the last 6 months or more, there have been shortages of basic necessities, including fuel, electricity, long brownouts, sometimes as long as 12 hours. There's been a shortage of gas, and now there's a shortage of certain medicine, etc. So by suspending payments, whatever dollars that are coming into the country can be used to pay for imports, which is the reason why we are having these shortages. So what an IMF program will try to do is it will try to have macro stability. Already, we have tightened interest rates. The policy rates have been doubled, and the market interest rates have gone in the government security market, even very short-term instruments as high as 20%. The currency has depreciated as much as 60%. So from a monetary policy stand, the adjustment is already taking place. And what we are now left with is on the fiscal side. So there are large energy subsidies. The price of diesel has to be increased by 70 to 80%. The price of electricity has to almost be doubled because they haven't been revised for a very long time. And with increases in commodity prices globally and a 60% depreciation in the currency, all these prices have to automatically go up to market levels. So the immediate pain to the households is they're already dealing with very high inflation, and probably the inflation rate is going to go up. And at the same time, basically, there will be a slowdown in the economy. So income earning opportunities are going to come down. So we are going to go into a fairly challenging period. And I believe the government will try to increase the amount of cash transfer to highly vulnerable households.
Yeah, and also ratings agencies have downgraded their sovereign ratings last year. But what do you think today's developments would then mean for Sri Lanka's financing prospects moving ahead?
Yeah, so we will now be categorized as a selective default. And since we were just one step from a default, we have lost access to international markets ever since we were downgraded to CCC somewhere in 2020. So as soon as COVID hit, our Eurobond started trading at 70 cents to the dollar, and we were put on negative rating watch. So by the end of 2020, we were downgraded to CCC, and sometimes in 2021, we were further downgraded to CC. So we have lost access to international markets for over 2 years, and we were unable to refinance many of our debts that were coming due. And one of the reasons is we ran short of reserves because we have been using whatever reserves we have to service the debt. So finally, we had to do this because our larder was empty.
Well, thanks for that, Murtaza Jafferjee, chairman at Advocata Institute.